All right, welcome back to Talk Tickers. You know the deal. We get into the weeds of these earnings calls so you don't have to.
Yeah.
Today, we're going to take a deep dive into RTX's Q4 2024 report.
Definitely an interesting one. RTX wrapped up the year with $80.8 billion in sales.
Whoa.
Yeah, an 11% jump. And get this, all organic growth, showing they've got a strong foothold in both commercial and defense.
Okay, 11% growth. That's pretty impressive. Got to give them that. But what really caught my eye was their 2025 predictions. Sales between $83 and $84 billion.
Mm.
I mean, that's a potential EPS bump of 5% to 7%.
Mm.
What do you think? Are they being a little too optimistic, or is there something more to it?
Well, their backlog is telling, a record $93 billion defense backlog, and a total backlog of $218 billion, which is 11% higher than last year.
Wow.
Yeah, this is a pretty good indicator of a healthy pipeline for future revenue. And another thing, 44% of their defense backlog is international. That's an 8-point jump from last year.
So they're not just relying on U.S. contracts.
Exactly, spreading the love, so to speak.
I like it. Okay, so they're clearly doing well. But let's break it down. What were the specific drivers behind this success?
All three of their segments, Collins Aerospace, Pratt Whitney, and Raytheon, all pulled their weight, really solid performances all around.
Starting with Collins Aerospace, they reported an 8% sales increase, hit $7.5 billion.
Yeah.
Which isn't bad at all. But I know there were some hiccups in their commercial original equipment sales, right?
You're right. They had a 6% dip in commercial OE sales. Because of lower narrow-body aircraft volumes, things like the Boeing 737 MAX. But even with that dip, their adjusted operating profit actually went up.
Really?
Yeah, by $172 million year over year, landed at $1.2 billion.
That is impressive. So despite those challenges, they're doing a good job managing, it seems. Okay, what about Pratt Whitney?
No, Pratt Whitney, they just soared. 18% sales increase, hitting $7.6 billion.
Wow.
And here's what's interesting. This growth, it wasn't just in one area. It was across all three of their channels. Commercial OE, commercial aftermarket, and military engines.
Okay, break that down for me. Which area was kind of the star performer in this growth spurt?
So commercial original equipment, they saw a 31% surge. Due to higher deliveries, specifically their large commercial engines, the commercial aftermarket also did well, a 17% jump, driven by higher volume, particularly for their geared turbofan engines and Pratt Canada.
GTF engines, right? Weren't those the ones that have been giving them a bit of a headache?
You're thinking of the groundings and the powder metal issue.
Yeah, exactly.
Well, despite all that, the GTF program seems to be on the mend. They've managed a 30% increase in MRO output in 2024. That's maintenance, repair, and overhaul. And a lot of that's thanks to improvements in forging production. They're expecting even more growth in 2025.
That's good to hear. Got to get those GTF engines back in the air and meet that rising demand. Okay, so we've covered Collins, we've covered Pratt and Whitney. Now, what about Raytheon? What were some of their highlights?
So Raytheon, they saw a 4% sales increase to $7.2 billion. Now, it might not sound as flashy compared to the other segments, but that actually translates to a 10% organic growth.
Okay, I see. So what drove that growth? Was it spread out like with Pratt and Whitney?
Their main driver was their land and air defense systems, especially programs like Global Patriot, NASAMS, and their counter-UAS systems. Those are the ones designed to combat drones, you know.
Interesting. So capitalizing on that global uptick in defense spending makes sense. Anything else notable about Raytheon's performance?
Yeah, actually, 5% of their growth came from the restart of contracts with a Middle Eastern customer. So they're not just making new deals, they're reviving old ones.
That's a good sign. Shows they can maintain those relationships.
Yeah, sure.
Okay, so we've gone over the numbers, and on the surface, they look pretty good. But I'm curious, is RTX just riding this wave, or are they actually taking steps to ensure long-term success?
That's a good question, and this is something that I think sets RTX apart. They're not just, going with the flow. They're actively putting money into innovation. In 2024 alone, they invested over $7.5 billion in research and development, both company and customer funded.
That's a serious chunk of change. But are they just throwing money around, or is there a strategy here?
Oh, there's a strategy for sure. They're really focused on developing technologies that address both the current needs and the future needs of aerospace and defense. So think fuel efficiency, resilient networks, directed energy, autonomy, artificial intelligence, even advanced materials.
Those are some pretty big areas. Got any concrete examples of how their innovation is actually working?
Sure. Take Raytheon, for example. They recently upgraded their Coyote effector. It's this small, expendable drone. It's designed to counter other drones, and they managed to design, produce, and actually field these enhancements in less than 18 months.
Oh, that's quick. And is it, actually effective?
Well, the results speak for themselves, I think. The U.S. Army has reported that this upgraded Coyote has taken down over 170 threats in recent conflict.
So it's not just like theoretical, it's getting stuff done. So this rapid development, is that something we're seeing across RTX?
Oh, yeah, definitely. They're applying it to tons of programs, including some classified stuff I can't talk about. But they get it. They know they need to get these advanced capabilities out to their customers quickly, and they're backing it up with plans for another $7.5 billion for R&D in 2025.
You mentioned AI earlier. It feels like everyone and their grandma is talking about AI these days. But how is RTX actually using it in their operations?
It's not just a buzzword for them. It's a real part of their strategy. They're putting AI to work in all their segments, and they're seeing benefits from it. For instance, Collins Avionics business, they're using generative AI to improve their software testing.
What kind of improvements are we talking?
Well, they've managed to cut their software testing cycle times by like 3 times, and they're still maintaining the same high quality.
That's pretty wild. So it's not about replacing humans, it's more about making them more efficient.
Exactly, and they're not stopping there. RTX has plans to roll out another 40 AI use cases in 2025. They want to speed up operations, shorten those cycle times even more, optimize capital, and rely less on outside labor.
Seems like a pretty smart play. So it sounds like RTX is playing the long game here, really focusing on efficiency and innovation. Anything else they're doing to solidify their position for the future?
They're also really leveraging their size. They're not just working as 3 separate companies. They're figuring out how to share resources and facilities to get the most bang for their buck.
Got an example of that.
Yeah, so Collins Aerospace, they recently added 125,000 square feet of production space. But here's the kicker. They built it within Raytheon's existing facility in Richardson, Texas.
So instead of building a whole new building, they're making use of what's already there. That's smart.
Right, and it saved them a ton of money. They cut the investment needed for that expansion by 50%. This is just one of many projects where RTX is streamlining their manufacturing and making better use of what they have.
It sounds like they're making all the right moves to keep growing and being profitable. They're not just reacting, they're shaping their own future with innovation and smart investments.
Exactly. They're a company to keep an eye on, not just for what they're doing now, but for their long-term potential. Now, that said, their future does look bright. But the market, it can be a bit unpredictable, can't it?
It sure can. And speaking of unpredictable, that leads us to our This Is Not Financial Advice segment.
A fun part.
Right. So based on what we've talked about today, what's our crazy yet plausible trade idea for RTX?
Okay, hear me out on this.
I'm all ears. Lay it on me. What's this wild trade idea you've come up with?
Well, considering how strong RTX is in both commercial aerospace and defense and, all the geopolitical stuff going on in the world, what if we went for a long-term options play?
Okay, I'm intrigued. Tell me more.
I'm thinking call options on RTX stock, but with a bit of a twist. Instead of short-term, we look at LEAPs, those long-term equity anticipation securities.
LEPs, those are the options contracts that expire way later than a year, right?
Yeah.
So we're basically banking on RTX to keep growing for a while.
Exactly. And you've got that potential increase in global defense spending, plus they're all in on those advanced technologies, AI, directed energy, the whole 9 yards. RTX is in a good spot to benefit from all that. These LIPs would give us some serious leverage to boost our gains if their stock keeps climbing.
Makes sense. But LEPs, aren't those riskier than short-term options?
Well, options always come with risk, right? But the thing about LEPs is we're giving RTX more time to really hit that growth potential. It's like planting a seed and letting it grow into a giant oak tree.
I like that analogy. So we're basically betting on RTX becoming a defense giant in the future.
Yeah.
But just a reminder to everyone listening, this is all hypothetical. This is not financial advice.
Definitely not. This is just a thought experiment, something to get us thinking about the possibilities out there. Any investment decisions you make, you got to do your research and think about your own financial situation. Don't just take our word for it.
Exactly. Never invest based solely on what you hear on a podcast. Even if it is Talk Tickers, we can't predict the future.
So there you have it. We went deep into RTX's Q4 2024 earnings call. We saw how well they're doing, talked about their smart investments, and even tossed around a pretty bold trade idea.
We saw how they're not just riding the waves, they're shaping their own future through innovation, efficiency, and smart partnerships.
RTX is definitely a company to watch for anyone interested in the aerospace and defense world.
As always, do your own research, figure out your risk tolerance, and invest wisely. Thanks for joining us on Talk Tickers. We'll see you next time for another earnings call deep dive.